Good morning, everybody. Today is October 1st, Wednesday. We got a new month here for us. And I'm looking at the SPY. This is the stream, Patreon, YouTube, Discord. You know the deal. Post your comments, your questions. We're going to catch all of them before the end of the show. Address all of them. But before we begin, folks, the usual checkup on the audio and the video. You can hear me fine, see the picture fine. I'm looking at the SPY, the 5 minutes chart. We're about to fill the gap right here. And things will get a little bit more interesting. But if you can hear me fine, see the picture fine, just give me a thumbs up. We're going to begin right away. Alrighty, thank you so much. And let's begin here with the SPY. A little bit of a gap down. Now we're closing the gap, but after that, it's going to get a little bit more interesting because we have to look at the gamma and then the big guys and what they're doing. So if we begin with the VIX, right off the gate, we see a little bit of support showing up here, but the most important number in today's session is going to be, once again, 17. Can we go back up to 17, close above 17 or not? We're above the 50. So the support is already intact. Now the question is, can we break and close above the resistance, which is 17? Haven't done that for a while now. The last one was in September 2nd, but there was no follow-up. And if we have another close, that's going to be the confirmation of that close right there, that volatility was building up. And we will see a pop, as we've seen right here, back in July, and that's going to produce a more of a serious pullback in the market. So that's going to be what I'm looking for in today's session. Can the VIX rebound at some point here and make its way all the way back to 17? And if it does, that's going to be a confirmation that we have a correction and that we have to consider beginning to buying puts in the index level, in the SPY and the Qs. But 17 is a must before we do that. That's going to be what I'm watching for in the VIX here. And as it moves, of course, you can watch the VXX, which is the short-term volatility. That's going to give you a better feedback on the SPY right here. So are we just going to fill the gap and then come back down as volatility begins to be revived? We'll see. But we're not seeing a big impact so far showing up in the dollar or even bond yields. We're not seeing impact showing up yet. Perhaps that feedback is going to begin to show up as we trade this session, but it is important to look at the gamma and see how the volume is building up. If you look at the expiration data today for the SPY, the 1st of October, the first thing that comes in mind here is look at the change in the calls. They're losing money. And the change in the puts, they're also losing money for the most part, unless if you're really deep in the money in the puts. So the market maker is already aiming for maximum pain right off the gate. We see opening of calls overnight out of the money. We see opening of puts with higher volume and higher contract value. So we see that the puts have the advantage in today's session. Sure, they're building some volume here in the calls at 65. That's probably already been satisfied, 65, and then 66 a little bit, but then it tapers off, as you can see right here. At 68, they're beginning to close some of these contracts. We see build up here. Look at the puts. They're building 64, 63. This is going to be a little bit of a build up here as we progress in the day for the 62, and it builds all the way to 660. So the puts have a healthier build up in the volume, at least right now. And I think they can pull it back all the way to 660 if they want. If they keep adding volume and fill the gap all the way to 60, because we need to see 62 and then 61 being built up in the volume here. They can push it all the way to 660. I think that the key is going to be the gamma reversal, though. And if you look at the gamma reversal right now, gamma flip is 665.19. That's what they say. I would say it's about 665. So just to be conservative, let's take the round number of 65, because once you go below, now you're talking about put gamma exposure. You can see that the volume here, put volume, is much larger. If you want to change it to the if you want to change it to the open interest, you'd see that we're also going to have higher open interest showing up in the puts. So the puts have the advantage, but they just need to crack below 665 again, and things are going to begin to work their way. And probably the VXX probably going to begin to move up, and that's going to be the catalyst. But as you've seen in Monday and Tuesday's session, it was NVIDIA that's really moving things and keeping the indices higher. It's no different today that NVIDIA is up about half a percentage point. There's this bid. They're building this bid in NVIDIA manipulation every day via call options with huge volumes showing up for out-of-the-money calls. So here we see 53,000 already building up for the 190. So forget about the 180 that we were buying before. That's being closed, though, so that could actually go against NVIDIA. That the deep in the money calls are being closed, and there is opening out of the money in the puts. So the dynamic could change even in NVIDIA, but that's going to be, if we look at the gamma flip, I'm just trying to guess here, looking at the volume. I think the gamma flip will be 185. If we trade below 185, then we can go back to 180, given the volume. So I'm going to check on the gamma here just for confirmation. It's going to be right here. Yep, 185. Problem is there's still not a lot of gamma showing up here in the puts. The puts need to be a little bit more aggressive. Look at the volume. Yeah, they need to build a little bit more, but this is the bigger volume, the 185. So once you trade below, the advantage flips. But right now they're still building the call position. 185 though, revisit to 185 and then trading below will end the show. But you see that dynamic that's keeping the market from flushing down. Now if we look at Apple's still looking okay. If we zoom out here to the hourly, it looks like it wants to play that cup and handle that we've been talking about. 260 or 259 as I have it here appears to be a little bit of resistance. I think it's going to hold this resistance here throughout the week because it is a strong resistance. It's a Fibonacci that goes all the way back to the top here from December 24th or December 2024. So it might be challenging to break above that resistance. It might take a little bit more time. And as Apple stalls, you just need NVIDIA to pull back and finish this manipulation that's happening in the call options. And the SPY will be able to pull back. I'm also watching Netflix. I don't know if you saw the morning brief, folks, but it appears to me that yesterday we talked about an opportunity for selling a credit call spread to raise some cash, and we gave you a lot of ideas, but what I found out that if I do a call credit spread, you're probably not going to raise enough cash to justify the trade. So, for example, you go October 17th, and then you go with, let's say, clean this up, and then you go with sell a call. You want to be in the safer side, for example, and you go with, oh, I'm going to sell the top of this reading right here by 1260. Let's see what we can get for that. If you do 1260 naked, you'll get a pretty good credit, given the fact that the stock is a huge value, but of course you need to cover it. So if you do something like this 75 as your buy, you're not raising a lot. So this is why I'd rather do the reverse calendar, November 21st, for example, and then we do the 17 as the buy. You can play with these strikes, but you have to keep a good buffer looking at the chart. You have to pick a stronger resistance here as your strike. And if you do that, you raise pretty good credit, and then we buy a put, as I said, of course, if you zoom out Netflix here in the daily chart, you plug in your moving averages, we're below the 50, we're beginning to break that neckline. We see that support line, 1175, that's the neckline of the topping and the shoulder. And then you have your 200 as the target here, which would be, around 1100. So that was the idea behind the trade that I gave you in the morning in the brief. So we buy a put here, 1100, and that's going to be October 17th. You're going to receive a big amount of credit. If you go to 21st, you're not going to receive credit. So this is why we went with the 17, but we're probably going to close before that. So if we, let's say, continue to go down on Netflix here, and I don't know, by the end of the week, we're trading at 1150 or 1145. We're probably going to close this one or open a spread on it to lock in more gains. And then assess the risk whether there's a rebound coming in Netflix or not. If there is no big rebound coming, then we'll just leave the structure as it is. If there is a rebound coming, then we're just going to close this trade and book whatever credit that we have from the trade that is left. So the chance of profit is pretty good if we manage this one correctly here, but Netflix is not looking pretty good, and there's talk about a boycott because of whatever it is. I think that's going to be impactful too in the stock price. Here comes NVIDIA, 187. Let's see if 187 here is a number where we see the volume is kind of rolling over or not. We talked about 185, but they're building all the way to 190. So we need to see. They could push it all the way to 190, by the way, just for safety reasons by the market maker, just to satisfy this massive volume. So I'm not convinced that we're through yet. I need to see us trading below 185 before we are confirming that NVIDIA is reversing, and that's going to make it easier for the SPY to reverse too. Looking at the movers, folks, let's look at the map. How about we do the map? If we do the map here, give it a refresh so we can see it better. You can see here weakness in Meta. So let's look at Meta here. Meta, we've been talking about Meta for a few days, and we gave you a trade in the stream yesterday, which is already at the target here, 708.5. But if we break that support, then the next target is going to be the 200. So you still got a lot of trade ideas happening in Meta here, but my 2 cents is it's going to be a little bit oversold, as you can see here in the MACD, or the RSI rather. It's going to be oversold at around 708.5. So I would wait for a rebound, maybe an attempt for closure of the gap, and then if it comes back down and breaks below, you'll short it again. If you have a trade already, then okay, that's fine. The rebound's not going to hurt you a lot, especially if you have 2-3 weeks till expiration. By then, you're probably going to be at the 200. So Meta on the weaker side, along with Google too, and then Microsoft is going back. Amazon nothing, Apple nothing, NVIDIA. We'll see NVIDIA's up about 0.5 percentage point right now, but it could reverse, and if it does, it'll do the magic. But look at the weakness that we see here in the banks. That's, of course, a result of shutdown. You see the weakness in some of the airliners. Energy is supposed to find a footing today, but it's really about healthcare. Healthcare is moving in a big way. The big pharmaceutical names moving in a big way here. So we'll look at some of these names, see if we have opportunities or not. Interestingly, the medical devices are down. So what does that say about the government shutdown, really? Because you have diagnostics doing okay, but the devices are down. So are we saying that the service is going to be disconnected, meaning we're not going to see sales of medical devices. I don't know. It's sort of jumping the gun here to a conclusion. And it doesn't make sense if you have diagnostics like Thermo Fisher and Don are heading higher. But this is where the value is. These are the value names right here, along with some of the big pharma, even Regeneron today, is making a comeback. Nike, that's an earnings result. Conagra was okay, up about 3.5%. But nothing really working out here, folks, besides healthcare leading the pack and some of these classic AI plays in memory specifically that's holding right now. But as we looked at these charts before, even by Micron, that's the leader. And if we look at Micron in the daily chart, it's breaking to the upside. So that's suggesting that there is still, that we haven't reached the top yet. Now we can play with some of the call credit spreads that we have in upping the strikes and speculate that perhaps 180 would be a better target. But let's see how NVIDIA is going to trade first this session before we make a decision here, because it could be a false breakout and they come down along with NVIDIA by the end of this session. So we'll keep an eye here, folks, SPY and the VXX before we take your questions and your comments. Let's look at the movers. Once again, LAC, I think we're done with that. Whoever has shares, you probably want to sell them. You got another opportunity to sell here. QuantumScape breaching the resistance. Maybe it's going to begin to break out of a cup and handle pattern. So that could be another idea to chase. Moderna, we talked about this before. So Moderna is finally working out because of the virus that's going on. Etsy looking pretty good. That collaboration with AI, Etsy's a buy. Even the earnings report from Etsy suggests that it is a buy. Thermo Fisher is looking pretty good now. Amgen, a lot of these big pharma names doing pretty good. ALBC was down big yesterday, but so long as we have higher highs, higher lows, we're good to go. Eli Lilly now moving. Merck is moving higher. So look at Merck, right? I mean, when you see the unusual activities that we covered in that session when somebody was buying Merck calls, they kind of knew what they were doing here. So you see the big moves in the last couple of days. Pfizer also adding more to yesterday's gain. Bristol Myers finally catching a bit, but we need to see Bristol actually breaking this consolidation to the upside and releasing the energy. Otherwise, I'm going to be frustrated with it. And if Merck begins to move in a sustainable fashion, or another name begins to move in a sustainable fashion, I might switch from Bristol Myers, even though we have a pretty good dividend here of 5.5%. So I'll give it the benefit of the doubt right now. We'll look at coal. That's doing pretty good still. And this guy didn't go crazy, such as BTU. So I'm more confident that it's going to be steady 80 and reach the 75 here, the previous resistances that we've seen here and here. So we'll keep HCC in the portfolio. JD, look at JD beginning to move higher here. So Chinese names are still finding opportunities. So JD looking pretty good to me here. If you look at the weekly chart, zoom out, let's see what the momentum indicators look like. You see the cross right here in the MACD. So you have your bullish confirmation in the MACD. Positive divergence showing up in the RSI. Confirmation in the vortex. I mean, what's not to like here? So JD's breaking out. If you want to play the options game, as I said before, you probably don't want to go with the contract that they're buying, which is the 40. I think that's a little bit too far. I'd rather go with the 35, for example, or the 36, and then sell the 40. And that way you have a really good trade for November 21st. You can do it for the 17th. But if you do it for the 17th, might as well just go closer to the money, or in the money already, 35.40. And you have, again, a $5 delta. You're spending about $150 to make $350. And you're betting on a breakout for JD. So it's looking pretty good here in JD. USAR, let's go to the daily rather. Are we still good to go? Yes, we're still good to go because we're still keeping support. And every time it goes down, you see these wicks, the buyers show up. So there is demand showing up here, and perhaps we're doing a cup and handle right now, consolidation. And we're going to break to the upside. So let's stick with this guy. Once it trades above and closes above, that's really important, closes above 1855, we want to double down and add shares, add calls. I'm going to do calls and then convert into shares at that point. Conagra, let's look at Conagra here. Good. See, we have the falling wedge breakout, so probably something positive came out of this report. Gonna have to look at it. I haven't looked at it yet, but let's see what they say. Sales beat estimates, resilient demand. Okay, that's what we need to hear here. But I'm gonna look at the margins and the profitability ratios. To me, that's going to be really important. If I find a confirmation, I'm probably going to add more to my shares of Conagra. I sold one name today that I have in my portfolio, which is Corteva, because it was going down. So that's out of the portfolio now. And I added this guy, Hershey's, as I said before. So this is one move that I just did in the morning. But let's go back to the movers here. I'm going to update you with this in a minute in my Discord. But we go to the movers, we see that Alcoa moving higher, pharmaceutical moving higher in a breakout. I mean, AbbVie is just looking terrific here, but it's a little bit too late to chase, my opinion. CRCL still working out pretty good. If crypto is doing okay, if Bitcoin holds, then CRCL is probably going to finish the move to that 155 target. Zinnia is doing okay. We talked about Carvana. Visa, Shopify, that's along with Etsy. OKLO, I think it wants to cover this gap here before it comes back down. But the movers, GDX is not impacted yet by the shutdown. But watch the dollar. I think the dollar is going to begin to do that ABC. Tomorrow is going to be Yom Kippur. My assumption is we're not going to have the government reopening tomorrow. I think this shutdown is going to be nasty and prolonged for a little bit longer because each party has the leverage to wait a little bit more. The president can wait a little bit more and make the Democrats look bad as the ones who are shutting down and impacting travel and impacting healthcare, etc. The Democrats would hope, of course, that with the shutdown, we'd begin to see some negative economic impact and negative market impact, and that adds pressure on the president to capitulate. So right now, between the two parties, it's going to be the stock market that decides what's going to happen next. If the market goes down, that's going to add pressure on Trump to begin to capitulate first. If the market does okay and holds pretty good, as it's doing right now, then it's going to add pressure on the Democrats to capitulate. But watch out here, because if the video begins to go down, and we see VIX heading higher, that could flush really fast. So we'll keep an eye on it. But the losers, you have Reddit. We talked about Corteva. Some of the medical devices, of course, down today in a big way. DLTR might exit. I haven't made a decision yet, but I might exit here because I don't want to go back, let's say, at the 80s again. I'd like to lock some profits here and maybe revisit this idea later on. Because there are a lot of other ideas that are opening up. Among them, of course, Viking, which I'm really interested in buying, but I think that we need to see a pullback first, and we're probably going to get it. And then we'll add to that name. But anyhow, folks, sorry for taking a little bit longer. Let's revisit your questions and your comments. We'll keep it at the SPY right here. Still at the gap, flirting with that gap. Good morning, everybody. And I got yesterday morning brief TSM trade, but doesn't look good as entry right now, Mehmet. So let's look at TSM here. Daily, are we still maintaining ABC? Probably not, but it could be if there's a failure midday, we close, let's say, below the high, we're still below the high of 286, then there is a possibility it's still an ABC. But if we close above the highs of this candle right here, 286, then it's not. And the technical thesis goes out of the window. And the Fibonacci will have to be extended higher. Although it looks pretty good here. It looks like the Fibonacci is accurate, right? You got your support, right? Support. So it's looking pretty accurate that you have a bottom and a top. So we'll see what happens by the end of the session. But if it does trade above 286, got to be out. Got to cut it and get out because the timing will be wrong. Netflix, I was too late, not executed for a reasonable price, so I left an order. Yeah, if you can't get a better price, just keep a limit order because you don't want to overpay or get underpaid for the credit. Make sure that you're getting the numbers that I showed you in the morning or close to. I want to make sure that I'm getting $3,000 for the reverse calendar because that's going to make it worth it. If you get 25, that's not worth it. The pricing is not pretty good. So keep it the limit right now. Craig, Mav, what causes SLV to go from 43.40 to 43 in a matter of minute? Large sell or just algo function? Let's see here. SLV, the 5 minutes. Look, I mean, with the shutdown and the possibility of the dollar going higher, I mean, somebody's going to book profits. I mean, this is an insane run in a short amount of time. Let's see here if we measure price. Just from this point on the break, late August, just say 1 month worth of gains. We're talking about 24, 24, 25%. Somebody's going to begin to sell here. So again, the higher it goes, there is demand still in gold and silver because a lot of folks are saying, okay, look at the year-to-date gains and gold and silver have been outperforming. So why not just stick with the defensive that is outperforming the market, which is gold and silver? So there is demand, but I think that there's also holders who are going to look at stuff like this and begin to buy puts and begin to book profits and cause these kind of sells. So if I'm guessing here, it's probably a sell order, big sell order, as you can see in the volume right here. Somebody booking profits. So if you're a holder, it's a warning that, hey, don't get too cocky here because things could reverse. Maybe the market right now is skeptical, saying, hey, we could find a solution by Yom Kippur, for example, and everything goes back to normal. But if it appears that the shutdown is extending, things could change. Sorry, can you remind potential longs you mentioned, if any, in the first 15 minutes? But that's why we have the highlights, because I don't even remember right now. But we talked about some pretty good ideas, but we'll revisit that in the highlights. Worth a shot for BI. It's mostly healthcare, since I'm reading this question here. BIIB or Amgen calls for this week. You don't want to play this week because if you get it right, you're going to score big. If you don't, if it's your lucky day, and for example, that we look at the pop that we got already, and you want to buy calls at an elevated RSI, bad entry. And you want to buy it for the week, you're probably going to be the one who's anybody who's holding shares, for example, and selling covered calls for the week, you'll be the buyer. And you end up losing money, they end up making money. So don't buy the calls for weekly expiration. Look at these charts from a daily perspective and think about them as which stock I'm going to buy. Or if you're not going to trade stocks and want to trade option, you got to go a little bit longer, October, November, and pick a strike out of the money. Because you could see a pullback at the short run. They went a little bit too high, too fast in a short amount of time. But between Amgen and BIB, Biogen hasn't been reliable. So, I mean, again, the Biogen went down, and it hasn't been reliable for a long time. So Amgen definitely over Biogen, definitely Amgen, Merck, Bristol Myers. I would say Amgen and Merck. I would not chase AbbVie, to be honest with you. Eli Lilly could be, but again, it's an expensive stock, so a lot of you are not going to chase that. It's really Amgen and Merck is where the opportunity is. Pfizer, to a certain extent, since Pfizer is the one that started this Trump RX thing, we could see that Pfizer is the one that releases energy. But be honest with you, between Merck and Pfizer, Merck has higher quality, better fundamentals. And we've seen some buying of unusual calls in Merck. So between the two, I would say that I probably want to go with Merck here, since it is the cheaper option. But like I said, don't go with the weekly because it's overbought. You buy the calls here, and then it pulls back. Let's say it does this. Pulls back, closes the gap, and then it begins to gradually move its way higher. What you're seeing right now, when you see a pop like this, that's a lot of short covering. There's a lot of folks who said, oh, big pharma tariffs, it'll be really bad for the sector, so let's short and sell. And now that they're getting that, hey, this is not going to be about tariffs, this is just another deal-making thing of, like Intel, they want a stake, they want a favor, and that's about it. So the shorts are covering, but they're going to be done covering pretty soon. And then you're going to see sustainable buying. You're going to see gradual buying. You're not going to see these big moves. So let's not chase via weekly call options. Strangulized small family, you say RZLV. Let's see if we can find the sticker here. Resolve AI. So you're doing a strangle here, this guy. To my eye, it looks like it wants to head higher, right? It might fail. You might try to fail and then do an inverse ABC and it's done. But the idea is you have probably higher volatility both ways. I would say probably higher toward the put side. This report is already out of the way. No, that's going to come out. I mean, I'm not sure. It says today, but it's not out of the way yet. RZLV. Trading higher. Okay, so they did report. Since they gave us guidance here, then they did report. And you're probably doing a strangle here, 6.5 or 6, and then you're doing a put, buy a put at 5. You got to make sure that you have equal delta. Now you're betting for either 4.5 or 6.5, doing a strangle like this, but it's probably going to be for the 17th. 21st would not make a lot of sense. This is going to be higher beta, so there's a big move coming here. You don't know it's going to be up or down. I think it's leaning down because right now trading about 550. So it's an equal distance between the two. You're paying for the put. You're paying here about 50 cents. And you're paying about 60 cents for the calls. So actually the calls have the better odds. They're betting that they're probably going to rebound higher before it comes back down again. Either way, you can't really speculate. There's a lot of possibilities here. My 2 cents would be an ABC, but that B leg could be much higher before it comes back down. So I think the strangle is pretty good here because you could actually play the 6 calls leg first and close that one. Let's say if we get a pop here, you close that one right here, book profits, and then rely on a move down, sharp move down in the remainder of the timeline that you got, and then you can book the 5-2. So you're onto something here. I like the trade. I usually don't trade options on stack trading at $5, but in this case, I think the volatility is worth it. Thank you for the compliment about the covered calls video. Thoughts on Oxy with Bloomberg buying in. So you got to remember that they're buying a unit. Okay, they didn't buy the company yet, but again, it's a good signal that we're going to reach the target of 50. And after 50, it's going to take time, of course, for the stock to begin to trade. Let's say back to the highs. That's a possibility because it's still producing pretty good profits, but it needs collaboration by energy prices to begin to move back closer to 70 again before that happens. So I would say in this case, if you're going to play calls on it, be honest with you. If you guys want to play calls, go with something that moves big. Either the speculative names like CRCL, for example, or Carvana, or the classic tech names with high volumes. Those are the ones that really make sense when you trade call options or put options. But if you're going to trade something like Occidental, you're better off buying shares because it's going to take time before things begin to move in the right direction here. But it is a good sign. It is a good sign, but you have to be patient with these kind of names. They're investments, they're not trades. Opinion on Paycom, Lenny. Paycom is probably going to be disrupted by AI. It's one of the software names that are really under big threat here. And my 2 cents would be Paycom is probably going to be a short. I want to see it close on a weekly basis below 200, and then I'm going to short the name. Just borrow the shares and short it. I think AI makes the entire software obsolete. While we have some companies that are kind of countering that and adapting their own AI to buffer their operations, like Snowflake, like Salesforce. This company is not doing it. I don't see how they're going to survive, to be honest with you. So, to me, this is a project for a short in Paycom. I just don't see the stock surviving here. DELL, Dell on a major level. Dell is catching this momentum behind Micron and all this stuff. I'm not seeing any fundamental reason behind that, to be honest with you. So if you look at SMCI, you're going to see the same thing, that SMCI is beginning to move higher. So if you don't want to exit a short on Dell, because I do have a short on Dell, one way you can play this, if there's more momentum in this trade in the equipment for AI, for example, these manufacturing names like Lam and AMAT and Dell and the memory, one way you can play it is SMCI, and you buy some calls on it. That's going to be your hedge and your bet that this momentum could continue. Not going to go too far because, to be honest with you, I'm not really convinced that this momentum can continue. I think there's a lot of speculation in it. And once we begin to see earnings rolling on for the third quarter, that narrative is going to begin to frizzle. But sake of argument, go to 50 and we sell the 60, see if we can get some credit for it. Yeah, just a little bit. So if we do this one, 34% chance of profit, spending 200 to make 8. That's a possibility again. If there's a big pop and you see names like Dell and names like Micron and SMCI moving higher, that could be a good trade. Another one would be, of course, if you do just the 55 naked. Doesn't have the best chances of profit, but it is cheaper. I would not say that it is unrealistic, because if you have a release of energy here via volume and call options, if they begin to stampede, we can go ahead and close this gap right here, and then 55 will be in the money. So that would be my idea right now. But Dell, from a technical perspective, yes, it is above an important level here because we've kind of topped at this level before. It is threatening that it could be, of course, in inverse in his shoulder. But again, I'd love to see what the reason is from a fundamental perspective, and I'm not finding it. It's just got a maintained buy today by the analysts. A new server launch. We've heard all of these news before. It's just an assumption that OpenAI is spending, but that narrative is going to crumble, to be honest with you, when we get to the earnings season for Q3. So I'm going to keep my short in Dell, but maybe hedge via SMCI calls. We're not doing anything here, folks. Just stuck in this gap here, and NVIDIA is still holding. So until NVIDIA begins to go down, SPY is holding pretty good, I would say. I see your strangle here for RZLV, but your strangle, you're doing a short strangle. Okay, so if you're doing a short strangle, my guess is that was probably before. So let's revisit this here. Because that sounding a little bit suspicious, right? To be able to raise all of that. So you have the 10. And then you have the 4. You see, that's not going to give me any credit here for the 3rd. That's not going to give me any credit. So either you open this one at a different time frame for September, of course. Otherwise, yeah, you probably caught it in a really high volatility. I see 381. That's your screenshot. Volatility here is still high, but you probably got it at a better price because this doesn't make sense. But again, the name is going to move in a big way. So I think now you probably want to do an actual strangle, as I suggested, because you catch the move either way. You don't care if it goes up or down. If it goes by half a percentage point below the strike or above the strangle, then you're making money. Let's talk about HYG and JNK. So HYG, bond volatility. You're talking about bond volatility. Yeah, look, a move to the downside in HYG is kind of a leading warning sign that we're beginning to see bond volatility here and weekly, right? It looks like a reversal candle, looks like exhaustion. We've been running, and now there was probably a reversal coming. And as this guy reverses, so will the market. So these are the kind of the early warning signs, HYG, JNK, that we got a problem, that you have to be on the hedging side. And if you see the VIX beginning to break its resistance, then you begin to hit the index with puts. Hello, world. Thank you so much for joining us. You say interesting developments coming out of Australia and China. Considering Australia's economy is based on houses and homes, You're looking at Rio and BHP, some Brazilian iron producers. Okay, we'll watch that. But I remember back in the financial crisis, the the European economy went down big, of course, with the collapse of the banks. So did the U.S. economy, but the Australian market did pretty good. And the reason is, once the dollar is devalued, Australia's economy is heavy in metals and resources and coal and all of that stuff. So it does pretty good and recovers pretty fast because of the commodity heavy. Of course, this ETF doesn't reflect that because it has a lot of banks in it. So you have to be specific. Even in Australia, you have to be specific with the miners. Those are the ones that are going to benefit, because once we have a problem in the global economy and the Fed begins to devalue the dollar even more, I think that Australia is going to benefit. But I watched another documentary, not documentary, but a report rather from Bloomberg. And they suggest that it could be different this time, that Australia's economy is not as resilient as it was before because of the exposure to the housing market. And we see huge inflation in the housing prices in Australia. So that could be a problem this time around. Either way, if I'm going to invest in Australia, I'm going to stick to the metals, the resources. I think those are going to be the opportunities. I'm not really right now finding good valuations, but in time, we're probably going to have some of those. And of course, if you look at a Brazilian Rio, or I would say just go with the EWZ. But EWZ been running pretty good. I mean, look at this run here. Since the bottom, we got one correction right around here, but that went higher by about 40%. Now you're probably going to get another correction right here. So that's one, maybe two. And if you maintain the higher lows, higher highs pattern, that's probably a buy. So I'd rather go with EWZ right now. I see a lot of value in the Brazilian equities. And China's demand is rerouting all toward Brazilian coffee and soybeans and meats. So I see good things happening here, especially if the dollar continues to be devalued. I think that's going to be the inevitable direction for the dollar. It's impossible to do anything. To deal with the debt, to deal with the problems that we have, we got to continue to devalue the dollar. I think that's going to be pretty good for Brazilian equities. Every single video from Options 101 is a gem. See, that's why I say we're writing the book together. A lot of folks are saying, yeah, what about the book, Mav? But we're writing the book together. And especially if we use real-life examples that we've done and look at the mistakes that we've done and learn from them and then do better trades, I think that's really, I mean, you're seeing the growth in real time, and that's where the value is. So suppose some of the call spreads that we've done actually work out. That's going to be what we learned from before, applying them in a new set of trades and seeing them actually working out. So still too early to say, but we'll continue this series right here, looking for a speculative rebound on BE. Bought the 76 calls for Friday, up 600%. You booked 70% and left the rest till the expiration date. So the 76 for Bloom Energy. It's an AI name. So here, I mean, look at this run. Since they bought, remember when they bought the unusual activities? I mean, it's not 152. It's even one higher to over 200 plus. Unbelievable. But right now, you're doing the right thing, right? You bet here on the closure of the gap. You got even better. You got the top. You got 70. Right now, it appears that we're probably going to do the double top, right? The Maverick top. And if we do that, you probably want to get rid of the 30, right around 78-ish. You get rid of the 30% left and you're done. But this looks awfully similar to OKLO, which could do the same thing, by the way. It could pop higher all the way to the highs, at least closing the gap and then come back down again. So maybe you want to rotate some of those gains to OKLO with a cut loss, of course. If we trade below these lows right here, I'd call it 108.5. To be a little bit conservative, I'm going to go with 108. If we trade below, then the trade is out the window. But right now, there's a possibility here. And since the gap is 130, so let's do this. OKLO. If you want to do naked, just speculation here, this is what I would do. Buy the calls, 130. It's too expensive, though. Wow. Too expensive. So here, we're probably going to do 130 and then sell the 140, see if we can get better credit. Yeah, maybe this one would be worth it. You can go a little bit further, 120 and sell the 130. But again, if it's a speculative bet, I don't want to bet too much in it. So it's probably going to be 130, 140. But you can see why do we see the premium so high right now? They're expecting a big move. The volatility is not over in this name. And they're betting probably in the pop, closing the gap. A lot of folks are doing the same bet. So this is one way to do it. Another way to do it, a little bit more speculative though, if you go with the butterfly, and then you sell the support, which should be the gap, or the resistance here should be the gap at 130. You buy the 120, and then you buy your 140 as your protection. In this case, if you go to next week, see here, this is going to give you better pricing and odds, but the 10th appears to be the sweet spot. Another option, but OKLO probably going to do the same thing here with Bloom Energy. When will PLTR do the same what Reddit did? Two different companies, right? So Reddit is a lower quality than Palantir, so it's already kind of topping here. Good chance that we go down and close the gap, by the way, but one step at a time because it's probably oversold in the hourly. That'll be my guess. Yeah, it is. So you're probably going to see a rebound, and it probably heads down. Weekly, are we seeing a change in momentum? Yeah, I mean, it's a newer chart, so we're not going to rely on that. On the daily, we see loss in momentum, negative divergences showing up. So, yeah, it could be a top, and Reddit. The valuation don't make sense at all. If there is a rebound, then we break below 200. For me, this is going to be a short. That's what I would do. Just enter a short. Palantir, that's a different story. Palantir has government contracts, and the revenue is actually growing fast. It's way overvalued, but that's what keeps it going. Every speculation about, oh, there's a new government contract showing up, a new deal with Britain was announced yesterday, so they keep pumping it because of that. But let's see here if it tops at a double top. If it does a double top right around here at 190, it begins to show signs that it is a top with the strong, let's say, bearish engulfing candles. Then I'd be ready to short it again, give it another shot. Of course, it's going to be really challenging to go against a name like this because it still has momentum. It's still producing growth. Doesn't justify the valuation, though. But shorting based on valuation, it's a tough one. You got to get your timing really precise to nail it here. And we remember some of these names, by the way, in the .com that were trading the same way. You try to short them, they keep going, and you begin to develop sort of, you have your cult, the fan base, who've been just saying, oh, the valuation is justified or whatever. Then you have folks who got burned trying to short them, and they form sort of a hate club against it. And then when it crashes, they just go aggressive, double down, triple down, and you see big crashes in these names. I think Palantir is going to face the same fate as these companies, but it's going to take time. It's going to take a lot of pain before it begins to deliver. So we don't want to be involved in the pain too much, right? We try to short. I tried to short earlier this year. Didn't work out. We went above the double top. Okay, for me, that was the exit. Same thing here. If we have a double top, probably going to enter a short. If we trade above, then okay, we have furthermore to go in Palantir. How about ASTS on level from where it is flushing down? Is it any reasonable trade that we can get in now for ASTS? It's really active in the options market right now. I've seen a lot of unusual trades on it. My 2 cents would be that you have here, let's clean this up because this is the new look. See here, you got topping in his shoulder, right? You broke neckline, but you find support here. Let's see if it's not a moving average. It's probably support from this reaction right here. So you see the wicks, right? That's your reaction, find support. And now it's looking to me that this guy is forming sort of a inverse in his shoulder. Could be argued as a bull flag breaking out. So if I had to guess, it would be that it's probably going to reach the highs here at 60. So if you want to do a speculative trade, ASTS, of course, if there is a pop in the VIX and the market sells off and we have risk off, it's going to be damaged like the rest of the market. But for now, it looks pretty good. So speculative bet will be for me buying the 60 naked. I don't want to spend too much on them though, because the premium is already elevated here. So you could try and do a calendar spread. It's going to reduce the cost a little bit, make it more reasonable. But again, if you want a trade, it's probably going to be the 60 naked. If we sell the 65, it'll help a little bit in reducing the value. But this is a trade that you probably want to book the moment it pops to 60 and above. And if you sell a leg like this, like the debit spread, it might encourage you to stay in the trade all the way to the expiration date. And what happens is maybe you trade closer to 63, 62 and a half. The trade is profitable here, but you don't want to buy back the 65 to close the trade. And before the end of the week, it flushes back below 60. I've seen these kind of trades before. So sometimes when you're speculating on a name like this, you probably just want to go with the naked here, folks. Okay, Stone 7580 calls for the 31st. Let's see. It is okay because you're maintaining a chance of profit of 32 plus. Anything above 30 is okay to keep. And again, it is a little bit outside of the money. If you look at the 75, it's about 5%. But the reason why they're putting a high premium on it is they're expecting higher volatility than usual. So they're expecting a pop here to happen. So I'm going to stay with the trade here, at least all the way till Friday. Now, if we begin to break and make new lows, such as trading below 72 and a half, yeah, I'll be out. But so long as we begin to find footing here and trade, and let's say get closer to 74 by the end of the week, if anything, I would say double down. Because the idea is we need to stay within the body of last week's candle. If we begin to close or trade below the lows, then no, something else is going on here. And you're probably going to go down to the boundaries of this wedge, and then maybe you come back again, but the trade will be dead. But so long as we trade within the body, let's say we improve a little bit by the end of the week and we close right around here at 74 plus, preferably, of course, then you probably want to double down because by the end of the month, you'd be above 75. So keep for now, but keep your eyes also on 72 and a half. With trade below, you probably want to exit. Small, you short OWL. Owl Software, biggest dead holder in the world, went down strong in this company's potential systemic risk. Tried to find a reason why OWL broke down 25% year to date. Could not find anything. My 2 cents would be Owl Capital is probably going to be sensitive to rates, right? So higher rates, higher debt. It's not a healthy combination, isn't it? So you're going to see a lot of companies with higher debt facing a problem. This is it looks like a really beautifully defined topping in his shoulder. Yep, there we go. And we could break down in a big way. So to me, this is a short. You probably want to short it and just hold it. That brings up the conversation, by the way. If companies begin to expand their debt, even the highest quality companies will face problems. So we're going to talk about Oracle in a separate video. And I'm going to show you those numbers that the debt for Oracle is already too high. even though this is a company that's producing massive revenues. So we're not talking about bankruptcy or anything here. But even the company like this could be shocked, could have a rate shock if we remember the conversation from yesterday, Goldman Sachs, the three bears. The rate shock could really crush Oracle. So you look at the balance sheet, look at this debt, right? I mean, over 100 billion. This is a huge amount of debt. Okay, so if you have all of this debt right now, and let's say your equity is just trading at 21 billion, and you're going to add more. I mean, they're planning to add 100 billion additional to the debt to build this stuff that OpenAI is ordering right now. Well, any problem in the growth of the revenue will be extremely problematic for Oracle. And if we begin to see that the rate on that debt increasing, they already have 100 billion that they have to pay interest on. They're taking another 100 billion. You're going to begin to see that even the profitability in the company is under question because you're going to have to pay, let's see here, the interest payment, non-operating income, interest expense. See here, about $1 billion last quarter. That's what they paid. They're going to pay about 3.6 billion this year almost. That payment could go higher with the interest rates. Could be the 5 billion. At some point, it begins to damage the profitability of the company and the net income. And if that is the case, even high quality name like Oracle could be going down. So this is why I say keep your eyes on the rates and the job numbers, CPI, PPI. Any problem in terms of, hey, we have stability in the job numbers. Of course, the ADP was not good today. But if we have stability in the jobs market, and it's not really bleeding, and the problem is coming from immigration and AI, and then we see, no, inflation is actually the one that's setting higher, then we're going to have a rate shock where rates probably going to stay higher. If not, the Fed will probably going to reverse before Jerome Powell is done. And that could be a problem for a company like Oracle. Now, you have to keep in mind, because a lot of folks say, well, the new regime of the Fed in 2026 will be friendly. They might cut rates or whatnot. But what matters is how the 30-year is going to trade. If the 30 trades higher, despite the rate cuts, it doesn't matter. It's going to impact corporate credit negatively. And that could be the catalyst for crashing corporate credit. And if corporate credit goes down, the whole game goes down. Anyways, that's a lot of speculation about the risk in debt. It's going to require a rate shock for that to happen. We're down 50% of the SPY 566 for Friday. Well, you probably mean 666. You probably don't mean 566. If you have it for Friday, you're not really that far out of the money, right? So I'm going to keep it, see how this session is going to trade. Because there's a chance we could flip back to negative again. We're not positive by much here. If we flip back to negative again, and you see the VIX making its way higher, I would say you probably want to double down those. Now, if you see the VIX, for example, closing below the 50, then no, there's something else going on. And you probably want to take half. But again, my guess is it's a weekly call, so before entering, you knew the risk that this is going to be a little bit of a roll the dice. If it works out, you get paid big. If it doesn't, you lose small. So here I would say hold it because you're not so far out of the money. And if we close negative today, you probably want to double down. Take a shot for Friday on the 566, double down, average down, and who knows, the 666 rather. Maybe by the end of the week, we'll be down to 63 or 660, and the trade is going to be handsomely profitable. Stone, Google, 240, 220 puts for November 21st. Thoughts on this trade, please? 240, 220. I mean, it sounds good to me from a delta perspective. Right now, we have this ABC playing out. Let's see, the moving averages are way too far. The divergence in the 50 is huge. We're below the 20, and we could find support at the lower Bollinger Bands around 230. So I like your 240, 220. Now, what would be the cut loss in this trade if we close above the 20 days? Right now, it's rating 244.61. I'm going to make that 245, right? So we enter that trade. If it begins to close, that's the keyword, not just trade, but close above the 20 days moving average right here, 245, then it's probably going to head higher, probably challenge the wick right here. And at that point, the entry of the trade is going to be wrong. But right now, it looks pretty good. You could see Google going down all the way without a rebound, going down to the lower bands, and your trade is going to be profitable. So, yeah, we'll do that. And again, you can, since you're not so far out of the money, you can go with the 17th if you don't want to spend a lot of the trade. You can go 240 and actually sell the lower MACD at 240, 230. Right? You have pretty good chance of profit here. Now, if you go November, you go to 220, you're spending a little bit more. So I'd rather at least give it a shot here. And some folks will go 235, 225, assuming that we might breach the lower bands a little bit more. And the idea is not to spend too much here. You're still close to the 30% boundary. You're spending 2 to make 8. That's a pretty good risk versus reward. And you have about 2 weeks till expiration. So I'll give it a starter here instead of spending $700. Let's give it a starter here, see how this one is going to work out. If it does, then we can expand on another idea. Hey, Mav, what are your thoughts on AMR? Seems like a good term, Coldplay, added to the portfolio. I think we looked at this name before. The problem is it's been lagging. If you're referring here to this name right here, it's been lagging, and it's really expensive at 171. So even trading call options is not pretty good on it. It looks pretty good technically speaking, by the way, because you have a bull flag that is breaking out, and it probably wants to face a resistance above the 50, so the 200 is going to be next. But I'd rather be this guy. I don't think you missed a lot in HCC. I think this guy's healthier, trading at a cheaper price, accessible. And if we look at the weekly here, we still got plenty of room to the upside. The daily, we still got plenty of room to the upside. I'd rather be in HCC. I think it's going to go back to the 70s here, 75. I'd rather be in this guy rather than the names that haven't been really performing. BTU is another choice, but BTU been hot, and that momentum could frizzle out really fast. So, and the call options are insane right now. So it is a seller market. It's not a buyer market in BTU, but in Warrior, could be a buyer market because it's more of a steady Eddie kind of play. Tamara, hey Mav, came into this live a little late. If you haven't addressed it yet, what are your thoughts about the unusual trade you posted yesterday on the SPY? Well, if you combine both trades, again, who's spending hundreds of millions of dollars doing the strangle? It's probably a trading house. JP Morgan, Goldman Sachs, could be one of these. And what they're doing here for the end of the year, they're betting that we have another move coming, either all the way to 7,000 plus in the SPY, S&P, or it's going to be a corrective move. They don't know which one it's going to be. But again, the idea behind the trade is they're going to have to close one leg. Let's say by October 17th, they'll know what's working out and where the market is going to head out. So another way, by the way, for all of us here, you want to look at the live flow and then go on the sell right here. And try to track which leg are they going to close first. Right, so you look at the big amounts here, and if you see that trade again with the same strikes and the expiration date, and it's probably at some point it's going to be a lower value, but it's still going to capture attention. It's going to be in the 200 million, 100 million plus. If you see it here, whether they're closing the call or the put leg, that's going to be a confirmation from an insider to us that they're confident that there is one direction showing up. So if they close the calls, then they're confident we're going to go down. And that's why they're concentrating on the puts. If they close the puts, no, they're confident that we're going to go 7,000 plus. And in that case, it's going to give us the go-ahead that we can speculate for year-end continuation of the rally. So that's how I read the trade. But of course, for us, we can't really replicate a trade like that in the SPX. It's just too expensive. SPY now moving higher. It's not because of NVIDIA. It's because probably volatility heading down a little bit. Is it because of Apple? No. Meta beginning to find support, but it's not it. Microsoft? About Google? Yeah, Google moving a little bit, but it's still not the catalyst. Amazon a little bit, but still not. This is probably volatility just heading down. We see the SPX moving up. Let's check on the volume again just to make sure. We're looking at the expiration date once again of the third of the first, which is today. High call volume showing up here, but it tapers off at 667. We're not too far out of that number. And then we have the puts still showing up big volumes here, folks. They're building that position. So this is going to be volatile. I don't think we're just going to go higher here because you see the volume tapering here in the calls. And then you have a big number of puts opened overnight and still in open interest and volumes being added here. So I think this is going to be a little bit more challenging than folks expect right now looking at the chart. I would not be surprised to see us going back to 65 again. If we break 65, then it flips toward the put side. So long as we're above 65, it is in the call side. And it means, by that, by the way, we mean satisfying the highest volume, which is 667. But then you go below 665 and you have to satisfy the higher volume in the puts. That could lead you back to 63. So this could be a really highly volatile session, folks. We have breaking news. Supreme Court is now allowing Lisa Cook to be at the job for now. So that's a big defeat for the president. Not going to be too happy about that. But again, what is that going to mean for the next decision either way? Without the jobs data coming out tomorrow, then we have no clarity really of what's going to happen. Hey, Mav, what do you think about an investment in EIX for a dividend? So this one we talked about before, that it makes sense for me to hold as a dividend play, but don't expect that we're going to recover all the way back because there are a lot of lawsuits from the fire, the California fire. It's going to take a long time for this stock to recover. But did it find a footing here with a double bottom? It's finding stability? Yes. And you'll find some investors trying to get in. And as more clarity comes in with the lawsuits and all of that and the settlements, it could be favorable to the company and it begins to trade higher again. But for now, it's paying about 6%, so that's a pretty good dividend. I would say it's okay to hold it right now just for the dividend, but at the same time, maybe you want to explore some of these pharmaceutical names like Bristol Myers because it pays a closer percentage in the dividend. And it could be a play that actually works out in the stock price too. And you're not stuck in the case of EIX. So let's look at the dividends here. Dividend yield. Don't forget Pfizer pays a big one. So Bristol Myers, Pfizer, they pay a big dividend. Energy names, that's going to require a lot of movement in the commodities, so we'll avoid that. But Dominion could be another one. See, EIX is pretty good dividend, but Dominion is maybe a stable play. A little bit lesser for dividend, but Dominion has a lot of growth going on right now. See, Dominion trades a lot better. Zoom out to the weekly chart. Clean this up. We're beginning to see sort of inverse in the shoulder. Certainly looks pretty good right now, just from an observational perspective. So Dominion could be a better pick for you, or some of these healthcare names. Now, if we go to the staples, MO, we talked about that. So MO pays a pretty good dividend. And the formation looks pretty good as a break from a bull flag pattern. That could be another option. Kraft Heinz pays 6%. This cup and handle didn't work out, but now, clean this up, we could have another thesis. If it works out, it might be a really good entry for you. Off, let's say, here, a falling wedge. So you could be buying Kraft Heinz. So you have a lot of options. EIX is not the only one, really. So explore those and write down the positives and negatives. For example, Kraft Heinz, it's been weak. There's a lot of speculation in M&A, and Warren Buffett didn't like it. hopes were that Warren Buffett is going to like it and we're going to see the name heading higher. So you ride the cons and the pros, and then same thing for these names like Pfizer, Bristol Myers. Pfizer now getting friendlier with the government, so that could be a positive, that we don't have any of these vaccine wars as we had before. Don't forget about Verizon. That's another steady Eddie that's been doing pretty good. So you have options. You don't have to go with the name that is maybe threatened via lawsuits and settlements at some point. The big SPX trade, they closed the short leg already. I don't see it here. I'm not seeing it here on my side. Mav, what do you think about SMR and JetBlue? Thanks. So if we look at SMR, daily chart for SMR, we're still holding that topping head and shoulders. So for me, that's a no-go. I'd rather go with the OKLO for a rebound. I'd rather go for with other names. But my 2 cents here, let's avoid buying this guy. I think it's probably going to head down if it breaks the neckline right here. Let's say in or around 34-ish. We're probably heading down big in this guy. So let's avoid JetBlue. Problematic because of the shutdown. All the airliners are down. But we're going to get a reopen. Once we get a reopen, I'm probably going to add more to the shares. Because my 2 cents is somebody's going to buy this guy and the administration is going to give him the go-ahead. And they're probably going to buy it at the premium. So we'll just add once the shutdown fiasco is over. Mav, do you ever see UNG going back to 80? Back to 80? That's kind of crazy, right? No, because there was an adjustment in the contract too. So no, I don't think that's going to happen. But is it looking better than before? Yeah, it is looking pretty good because it's above the 50. That's, again, the first close above the 50 in a long time. And it's beginning to look pretty good. The seasonality is pretty good. But like I said before, I think that you're better off going with a stock like EQT, which is popping pretty good right now, about 5%. You're better off going with the EQT. You're better off going with even LNG, Cheniere. Could be a better pick. Coterra is not moving as much as I'd like it to, so EQT appears to be the name of the game. You got to remember that we gave you a morning brief here suggesting that you buy EQT. Didn't work out right away, but look at it right now. So I'm still not positive in UNG that it's going to have that momentum to justify going big, but in the case of EQT, I am. Going all-time high, I wouldn't bet on that. There's too much supply right now. Yes, there's a shortage of the Russian nat gas, but even the Europeans are buying Russian nat gas via proxies, so there's a lot of supply right now. The long leg is still there. Well, if you say I trust you, and if that means anything, it means that they're confident that we're going to head to the upside. That could be the case, and it's working out that way right now. But keep an eye, folks. We're going to wrap up this session right now. Keep an eye on how we're going to trade in the VIX specifically. Because I'm looking at the volume right here, and I'm seeing, yes, the calls taper off at 67, 66, but there's a lot of big volume showing up in the puts, and they could add pressure on the market maker to begin to push the tape down, especially if NVIDIA flips below 185. NVIDIA still got the possibility of 190 right now, but it looks here that it got double rejection, at least in the 5 minutes, so it's facing a little bit of a sell on the 187 contract. Some folks are selling, adding pressure to the downside. So if that continues, begin to head down to 185, VIX begins to find a footing. You could see the SPY going down to 65 again. I think it's going to be an interesting session by the close. But anyhow, folks, by 30 minutes, we'll be back again in the chat session in Discord. We'll see some of you there. And if you're done or if you're just going to trade in your own, good luck and have a good rest of your day. We'll talk soon. Take care.